Hey guys, good afternoon. You should hear me now. Sorry for that brief delay. Can everybody hear me okay? Awesome. All right, so you guys got me? Great. Awesome. Awesome. So, like I said, good afternoon, but I guess maybe I should be saying good evening, maybe even good morning. I don't know. Where are you guys logging in from? Where are you guys joining us from here? Vegas, LA, Quebec, Canada, Ottawa specifically. Oh, nice. Dublin. Awesome. UK, Wisconsin, Seattle, Memphis. Ooh, jealous out in Hawaii. Awesome. So, yeah, like I said, I mean, I guess I should have covered all bases saying good afternoon, good evening, good morning, depending on where you're logging in from. Appreciate everybody taking some time to be here with us today. So, as you can see here, you guys got the title slide, right? I just want to make sure that you can see my screen here before I start getting into what we're here to talk about. Awesome. Great. Thank you. Okay, so obviously we're here to talk about Forex, so that's what we're going to do. Before we do that, real quick, just to get it out of the way, standard disclaimer. Basically, it says it's possible to lose money trading. And not only is it possible, I mean, I'm going to be very honest with you guys, it's guaranteed. If there's any guarantee that we can make when it comes to trading, it's that you will have trades that lose money from time to time. I mean, that's just the reality of how not just trading, but business in general works. There are losses that will be incurred along the way. However, as long as you can, you know, as long as you can make it such that you have the ability to have not necessarily more winners than losers, but manage your winners in a way that it exceeds your losses. So it's not to say that you have to win more than you lose, although that is nice. You can lose more often and still make money. So as long as you have a plan that makes you successful, that at the end of the day is what really matters. It's not about this one trade or that one trade. But again, I got to let you guys know, if you don't know it already, it is possible to lose money trading. Can only watch for a couple minutes before I go back to work. Would I be able to get this emailed? Yeah, so you will receive a recording of this following the end of it. Right. So what I'm going to ask you guys to do is clear your calendar for about the next hour. If we go a little longer than that, that's fine. I'll be here to answer any and all questions. I will ask that, if you can hold the questions off until the end, this way we can get through the material. Then if you want to stick around and ask questions, I'm happy to do that. But again, for those of you who have allocated an hour or so here for this, I want to make sure you guys get what you came for. All right, so save those questions for the end, or I'll just scroll back at the end and get those. All right, but again, we're going to be here together for the next hour. So what are we going to talk about? We're going to talk about some of the major lies that are associated or connected to Forex. We'll also talk about why you should trade Forex. I mean, I think that in general, there are a lot of fears or misconceptions when it comes to Forex. A lot of people, when you tell them that you trade Forex, they look at you like you're some kind of gunslinger or risk taker. And by the end of this webinar, I think you're going to look at things a lot differently. If that's kind of the thought you have right now. And I'll be honest with you, there are probably people that did not sign up for this webinar because that's the thought that they had. They let their beliefs limit what they're going to do. And I think, as I said, by the end of this webinar, you're going to be happy that you took the time to be here. Now, before I step further into this, how many of you guys are actually trading Forex right now? Yes, no, How many of you guys trade Forex, maybe taken a look or two, but never really got into it? So we got some yeses, some nos, some trading the Euro futures, okay? All right, so kind of a mixed group here, which is awesome. So for those of you who are trading Forex, you already know the advantages, and you know that what I'm saying is true, in that a lot of people have just the wrong idea based on what the mass media leads them to believe. And then for those of you who haven't traded Forex before, you're going to see that whether you decide to make this your quote unquote bread and butter, or if you just want to use this to help diversify what you're doing, there's advantages all around, right? So we'll talk about all that, all right? And then I'll show you some trade examples, both trades from earlier this year to trades that have been taken today. I'll show you a couple trades that I got going right now. So you can see that what I'm talking about, my approach, is not something that is only working right here and now, but it works no matter what, right? It's timeless. Right? It's a timeless approach that you will be able to use not just on Forex. I mean, you can use this same approach that I'm going to talk about, not just on Forex, but on futures, on equities, ETFs, etc. So it's a timeless approach that you will have with you for life. All right. So with that, let me just quickly tell you a little bit about myself, so that at least you can be a little more comfortable, with who's talking to you. You can put a face to the name, kind of know where I came from, what my background is, and then, we'll get right into it, okay? So 9-year trained trader slash investor, and, I started with futures. My upbringing had me or my path rather, had me get started in futures, and then I moved into ETFs, did a little bit of that, and now my focus is primarily on Forex. So I've kind of been all over the place, and throughout that entire time I've used the same method. As you can see, I graduated from Pace University and really knew what the markets have to offer, so that's what I dove right into. And so since then, you can see I teach a number of our courses that we offer here at T3, primarily the Forex program. I contribute to our research department, our Buzz and Banter service. So bottom line is I'm in and around the markets constantly. Really have a pulse on what's going on. So that's a little bit about me, and I'll get into a little bit of my story as we go on. I mean, I'm not going to bore you with all the details, but I'll let you guys kind of know where I came from. I mean, look, I, like anyone else, went through, the learning curve that we all have to go through. Feeling like, I'm not going to be able to get this. I can remember distinctly one of the biggest losses that I ever had, was on the Russell futures. It was when I was first starting out trading the Russell futures, and I knew it wasn't a great trade to begin with, but I did it anyway. And then I just started justifying why it was okay. And then as it started pulling back, I didn't want to take the stop. So what do? Right? What do you think I did? Just starting out, new trader, trading the Russell futures. It's coming back in. Don't want to take the stop. So what do? You guys tell me, because I'm sure we've all been there. Right? What's the next part of that story? Yeah, you start going into hope mode, right? You move the stop, right? Yeah, exactly. Even add to it, right? You add to it so that you can bring your average cost down, because look, I know I'm right, there's no way I'm wrong. It's going to move up, so I did all of those things, right? And it got to the point where I was just like, you know what? I'm hemorrhaging here in a sense. I need to just stop the madness, right? And get out of the trade, regroup. I was able to, I can remember I had to step away. I walked away. I'm in, a cold sweat at the time, and I had to really kind of look myself in the mirror and figure out this isn't what you trained for. So you get out of the trade, maybe you can crawl back a little bit, get yourself somewhat out of the hole, and then at that point you got to reassess what you're doing and really rethink what it is you're doing, get your plan in place. So I'll get into it a little bit more as we go on here, but that's a little bit of my story and where I've come from. So what's going on in the market right now? Let me take down this PowerPoint real quick, and I'll show you kind of what's going on. So can you guys see the charts? You should see about 6 charts right now. You guys got those? All right, excellent. So these are what's called the major pairs, meaning that they all include the US dollar as part of this currency pair. Okay, so what I have open, right? I have a couple trades open, but on this screen here that you can see, I actually have been short Aussie US dollar from early this morning. I entered this trade about, it was like 8:30 this morning. So as you can, and you can see it right here, right? You can see the line where the trade is entered from. So I'm in it here, really just managing this at this current moment in time. So these are the kinds of things I like to do. I mean, I like to go with the direction of the trend. I don't like to really fight the prevailing trend, and I look for my spots. And I'm selective. I'm not overly selective. I like to be involved with what's going on, but I'm not going to chase something, right? I think if I haven't learned from that based on the story I just told you, then I've got some bigger problems that I need to address than being here right now with you guys. So anyway, got the Aussie dollar, and as you can see, I mean, it's moving lower really, really well. We got some real great follow through initially. Right now, time of day, it's just kind of taking a break, but I'm looking for this to continue moving lower. Probably going to pause. Maybe it retraces a little bit, but should continue lower. The New Zealand dollar, US dollar, which is a similar pair. You can see they trade similarly, but this one I didn't take because it's been stronger. Let me show you the daily chart real quick, and you can see that it's been trending up and it's right down into support. So it really wasn't the ideal pair to be shorting. Right? And this is something that's important to know, because there are going to be people inevitably that went short this pair, New Zealand dollar, US dollar in the upper right, and they're like, well, what gives? Why is this moving lower so slowly? Why isn't it following through like Aussie dollar, US dollar? And it's because of what's going on in multiple time frames, and that's something you need to be much aware of. I mean, in addition, we had some nice follow through higher, some movement up on US dollar yen. You can see US dollar, Canadian dollar in the bottom middle chart also has had some nice upside follow through as well. So all in all, I mean, things have been moving well. I'm also short Euro US dollar. This one I entered not too long ago, and given the time of day, it's kind of just sitting here right around the entry. So I'm perfectly content with just sitting with this one, letting it do its thing, and we'll be looking for this to move lower. Do I see the pound US dollar retracing higher anytime in the near future? Not really. I mean, here's pound US dollar in the bottom left. I'll actually expand this. And, the way I look at things, we're in a downtrend, right? This is an hourly chart. It's in a downtrend. It's just consolidating here. The daily time frame is in a longer term consolidation since the Brexit vote, right, which was back here. This was the Brexit. And actually, I did actually trade the Brexit when it happened. I actually was short this pound US dollar pair and captured some of this move down, which was really nice. But anyway, in terms of right now, it's just going sideways within a longer term downtrend. So the expectation that I have is that in fact it will move lower in time. That's kind of my longer term outlook on this. And even looking at the weekly chart, it's just consolidating within a downtrend. So my approach, my thought here is that it will continue to move lower. Does that make sense? I mean, does the analysis make sense? What I'm talking about here? Yeah. Okay. Because I mean, this is really how I approach things day in and day out. And it doesn't matter the time frame I'm looking at. It's the same approach. And what I'm looking for is when multiple time frames are aligned. That's obviously going to be when you have the best odds for success. But this is what I do each and every day: is look at these time frames, see what the trend is, see where the quality is. Because again, had I just looked at New Zealand dollar, US dollar, and said, "Oh yeah, it's in a downtrend, I'm going to short it," I would have been pretty pissed off seeing how it's acting against something like Aussie dollar, US dollar. So it's important that not only do you identify the trend, but also the quality of the trend. And those are some of the things that, as I said, I look to do each and every single day. So that's what's going on right now. Let me bring you back to the presentation here and talk about those 5 major lies. Okay? I'll talk 5 major lies that a lot of people think to think are true, but as I'll show you, really are not. So with Forex, it's a get-rich-quick type of market or scheme. And, admittedly, that can be true for certain institutions. Certain places will just look to pitch you that get-rich-quick dream. But quite frankly, that's not what I'm here to do. I'm not looking to tell you you're going to get rich quick. I mean, will you get rich? Sure. Yes, the same way I traded futures, I trade Forex. So, look, I'm not telling you you're going to get rich tomorrow, but if you follow what we teach, right, it's going to be really hard, A, to lose in a major way, and B, it's going to be hard not to make money. Right? So if that's what you're interested in, then you're in the right place. Right? If you're looking for a get-rich-quick type program, I'm not going to waste your time. I'll tell you straight up, this isn't the place for you. So if you want to stick around and continue listening, I'm more than happy to have you, but um, that's not what I'm about. Right? Next lie. Forex is just for short-term traders. Based on the trades that I just showed you and on the time frame I just showed you, which was the hourly time frame, clearly Forex isn't just for short-term traders. In fact, I would argue that you can make more money, easier money, by trading the long-term charts, hourly chart, and holding it. Because as I'll tell you guys in just a little bit, it's a 24-hour market, so you don't have to worry about a gap from one day to the next. That's not to say there aren't news events that can quickly change the landscape, but it's all dynamic, right? So when news comes out, there's that immediate reaction, right? It's updating dynamically. And that's one of the nice things about Forex. In fact, if you guys were around and looking, I was long New Zealand dollar, US dollar last week. When Yellen made her comments, you could see that spiked up really quickly, and I was able to make a nice profit on that. So, that's just one example of what can happen. But as I said, I could argue that it's easier to make money trading Forex on the longer term charts because it blends swing trading and day trading together. You can enter on an hourly chart and just hold it overnight, and if you don't like the action, get out of the trade. You don't have to worry about it gapping against you the following day. Right? And so we'll talk more about it. I mean, I don't want to get off too far on a tangent here, but we'll talk more about it. Right? The market is rigged. It's another quote-unquote lie. I mean, in all honesty, what market isn't on some level rigged? You know, you talk about HFTs. So the bottom line is, look, you know, you can make excuses about anything, but Forex is no different than anything else. I mean, you saw the charts that I just showed you. They didn't look any different than other charts. Would you guys agree with that? Would you guys agree that the charts that I just showed you look almost identical to, you know, any futures contract you might look at or any equity that you might look at? Yeah, so there's no difference between Forex and trading anything else. It's just the vehicle that you're trading, the instrument that you're trading. That's the only difference, especially with the approach that I take. Another lie is the more complex the strategy, the better. You know, sometimes, guys, and I'll just keep it simple here and say that the KISS method is best. You know, keep it simple. Just because it's complex doesn't mean that it works. And I'm sure some of you guys can probably speak to that. And finally, success in other markets does not equal success in Forex. While that may be true for some, you know, I think that where this really stems from is people trading a system or some kind of, you know, red light, green light system that's based on some combination of indicators. That will not work. But what I do works, regardless of what you're trading, whether it's Forex, futures, equities, doesn't matter, because it's based on price. It's based on human emotion. I'm not looking at all these different indicators. I'm not looking at fib retracements. I'm not looking at the MACD, RSI, Bollinger Bands, Elliott Wave, etc. Right? It just, because they don't matter. They're all based on price. So it's not to say that you cannot have success in Forex. In fact, I would even go so far as to say that if you have struggled in other markets, that Forex may be the answer for you because it's more focused. You don't have to worry about scanning. It's 24 hours, the cost advantages, which we'll get into here in just a moment. But these are some of the things that you know, you need to be thinking about. And instead of thinking, oh, well, Forex isn't for me because of all the negative press it gets or because of what everybody says, you know, maybe the people that are saying it because they want to keep it to themselves. You know? So why trade Forex? Like I said, not even exclusively, but maybe just to diversify the portfolio and have other things working for you as well. Not to mention just from the volatility aspect. Guys, those charts that I just showed you, would you say that they have had better action? You know, I'll just show them to you again. Would you say these charts are displaying better action than what you've seen out of the equity markets or futures markets? You know, if you're trading the index futures, would you say these look better in terms of their movement, the volatility? Because the S&P, you know, volatility-wise is near record lows. You know, so the movement that we've seen, and I mean, I could change these to daily charts as well, but you know, the movement we've seen has been nice. You know, we've had some decent moves in Forex. The volatility has been there, right? And you know, you can't necessarily say the same thing for equities. And that's one of the nice things as well. And it's constantly moving, so it gives you that extra added benefit. S&P volatility is near record lows. Yeah, these are 1-hour charts, correct. All right, so just wanted to show you that. All right, so why trade Forex? Right? It's the most liquid market in the world. Here it is. You can see just from a graphical representation, the U.S. stock market does $191 billion a day in daily transactions. The futures market does $437 billion. Forex, you're looking at $5 trillion a day in daily transactions. So as you can see here, it dwarfs what the U.S. market and the futures market combined are able to do. So it's extremely liquid, meaning you don't have to worry about where you're going to get filled, are you going to get filled, etc. Right? You hit that button, you're going to get filled where you want. As long as you're trading those, major pairs or the major crosses, you're going to get filled where you want, when you want. I can promise you that. Now, that being said, don't be trading around a news event, because then you might experience, a fill that you're not looking for, but that's why you got to be aware of the news as well. All right. And as I've already alluded to, it's a 24-hour market. Here you can see the breakdown of the various sessions. You got the London session kicking off at 3 a.m., going till noon. New York starting up around 8 a.m., going until 4. Sydney and Tokyo sessions getting underway here now and in a little while. So you're constantly getting this streaming flow of data coming in and trades coming in. So, I will say that during the Sydney and Tokyo sessions, things can slow down a bit, but I don't say that in a way where it means there's no opportunity. In fact, a lot of times those windows, if you will, create the setups that you're going to look to take for the following morning. And we get into all this in the course that I teach as well. So anyway, you can see the breakdown here. And as I said, because it's a 24-hour market, you don't have to worry about gaps from one day to the next. It's just a streaming flow of data that allows you to manage things without worry. If you can't sleep because you're in a position and you just feel uncomfortable about it for one reason or another, fire up the platform, take a look and see what it's doing. If you want to adjust your stop, you go right ahead and do that. If you want to close the trade for a profit because, this feeling in your gut tells you to do it, go ahead and do that. But that's one of the major benefits of Forex from a trade point of view. Now, from a cost point of view, typically you've got no commissions as it's built into the spread. Right? So you don't have to worry about those additional fees, right? Like platform fees or data fees or exchange fees. All of these do not exist in Forex. So think about how much money you can save in the fees alone when it comes to trading Forex. Just think about it for a minute. Add up what you spend in fees and then put that in your pocket. Because that's essentially what's going to happen. Now, as far as a pip, it is simply the smallest incremental move that occurs in Forex. So it's like a point. When you're trading the markets, it's a penny. It's the smallest incremental move that can occur. So what we're looking to do as Forex traders is capture pips. That's it. It's that simple. Right? Nothing complicated about it. Now, you can trade different lot sizes. So a standard lot, 1 pip is equal to $10 on US dollar pairs. A mini lot, 1 pip is equal to $1. So, again, you can trade multiple mini lots, multiple standard lots, whatever you're comfortable doing. And if you're looking to just get started, And this is again part of why I say that if you've struggled, whether it be because of costs, just chewing your account up, or whatever the case, trading Forex, you can get started with relatively small amount of capital, and you can start trading mini lots where, you know, a pip up or down is $1. It's not going to break the bank, so it's not paper trading, but it's not trading with too large a risk where you can't be objective, right? So it's a nice blend again to help you throughout that learning curve. You know, and while you won't be making tons of money if you're trading mini lots, it's not about making tons of money initially if you're trading a mini lot. You know, it's about the scalability of that. So if you can make, you know, $100, $200 on a trade off a mini lot, that can turn into $1,000, $2,000 and more once you start to get more confident and once you start to trade, you know, standard lots in bigger size. So it's about the scalability and initially just learning if that's what you're doing. So is this all making sense so far, guys? Everybody following me before I go on? Because I want to show you some trade examples, but if you guys don't understand what we're talking about so far, then you'll be lost in a sense. The spreads depend on the pair, to be honest, and also your broker, but you know, you should have pretty tight spreads within 1 to 2 pips, depending on the pair. Right. So let me show you some examples, and like I said, I mean, I showed you a couple examples of trades I've got going right now. Some of these examples are from earlier in the year. Point is, it doesn't matter when these trades are occurring because the setup is always the same. Right? The setup is always going to be the same. So here you can see the short was right over here on this breakdown. I shorted Euro Yen and captured it at the moment I was still in it. So you can see where the entry was. Here's the trail stop. So it was in the green. In other words, there's no way this trade is not going to make money. There's no way this isn't going to make money for us. So as it continues to move lower, at the time I captured it, it was up 110 pips on a 20 pip stop. So in other words, if you're trading a standard lot, that means you were risking $200, right? And you're up just over 1,000. Right? In other words, 5 times your risk. You're up 5 times what you were risking on the trade. And in a relatively short period of time. I mean, this is a 4-hour chart, so I just kind of zoomed out to get more data, but this is in the span of, you know, 12 hours, and it's pretty painless. You know, again, you don't have to be sitting in front of the screen, and that's one of the things I like about Forex. You know, you don't have to babysit the trade. You can place the trade, and then you say to yourself, you know what? I'm not going to do anything to this trade management wise for at least the next hour or two. So I can go and do whatever else I want. If I want to trade equities as well or futures, I can go do that. If I want to go spend time with friends or family, I can go do that. You know, and that's one of the nice things about Forex, especially trading off these larger time frames, is that it's relatively easy to do it, because you don't have to be glued to the screen. You know, I got other things going on that I like to do, that I enjoy to do. I don't want to have to be sitting in front of the screen all the time. So this is a perfect compromise in a sense, you know. So there's one trade. Here's another Euro US dollar. This one also on a 4-hour time frame, and this was a pullback after some news had come out. And basically, I would have wanted to get it down here. I didn't, though. Obviously, I mean, I wasn't able to. I shouldn't say obviously, because you can't see the exact entry, but this like to have gotten it. I wasn't at the desk at the time, so it is what it is. But here's a red bar being ignored. I can use that as a way to get on board, and boom, here's your move. You can see I entered it here over those highs. I got out as it came back up into this prior area where it struggled previously, and I took that easy money. That's what I got out of this move. I'm not going to sit here and tell you I got the whole move, because I didn't. And quite frankly, I'm not really concerned with capturing the entire move. I look to get the meat out of the move. If I can get the majority of the move, that's what I'm happy with. I've done the whole dance about trying to get the bottom or the top of a move and exit on the other side of it. I've tried getting out at the top of a move after being long. It just doesn't work out the way you want it to. I mean, it sounds great in theory, but it's just not for me. I mean, I'm like I said, I'm going to look to take the easy money because that's what I want to do. After telling you that story I told you earlier, that led me to inconsistent results, having wild swings in my emotion. I just, it's not a sustainable type of approach. So you have to find something that makes more sense, that's not as stressful. Not to say that trading in general doesn't have some level of stress, but without a plan, without an approach, then it's that much more difficult. And so I knew that in order to get better, I'd have to correct the mistakes. I had to stop chasing strength or weakness. I had to stop worrying about trying to be in at the bottom or getting out at the top. And I had to set goals based on, following the plan, executing the plan as I detailed it, instead of thinking about the money. Because, a funny thing happens when you focus on the quality of the setup, when you focus on following your plan, the money almost comes as a result of that. I mean, it's like it has to happen. If you follow your plan, and granted, it's got to be a plan that through testing and having confidence in, the money will come. It's when you focus on the money that it's one of the hardest things to actually make. Does that make sense? When you actually start thinking about the money, it's one of the last things you'll probably see hitting the account. But when you focus on the approach, when you focus on being disciplined and following the plan, that's when it starts to become easier. And I didn't know that at first. I mean, I knew it, but I didn't know it. You know what I mean? So it's one of those things that you kind of go through the learning curve of. So anyway, look, as I said before, they don't all work out. I'm not going to sit here and tell you that they do, because they don't. But it's about how your plan allows you to adjust for it. Just because it doesn't work doesn't mean that you failed. First of all, I mean that's the worst thing to do, is look at a failed trade or a trade that gets stopped out as some kind of self-reflection. Some way that means that you failed as a trader. No, right? I mean there are a number of reasons that trades don't work out. Right? It's just one trade out of what'll hopefully be thousands for you. So don't worry about one. Right? If it starts to become an ongoing issue and you're having failure after failure, then you just need to re-look at and re-examine the plan. It's not that you are the failure necessarily. It's that the plan that you have instituted for yourself isn't necessarily right for you, or you're just simply not following the plan, in which case you got to correct that. So anyway, they're not all going to work. But when they don't work out, does that mean that the trend is over and now you should shift your bias? Or does it mean that you were just a little early, maybe you didn't give it enough room, and that the trend is still in place and you should continue looking for it to move in the direction that you originally thought? See, with this one, right, this first buy setup failed, right? It pulled back in and then continued to move higher. So you have to have an objective approach, right? Which is something that I teach in the course, and I'm actually in the process of, and we're going to be rolling out a newsletter here starting September 1st, where these are the types of things that I'm going to be sharing with people. These types of trades, these types of thoughts to help keep you objective and in the moment. Trades that include exact entries, right? Targets, where to put the stop, right? Walking through, managing through. Also, what's going on? What am I looking at? What am I thinking for this pair or that pair, and what have you, and some lessons. So, because that's what it's about, is about growing, right, as traders and as a community. But here's another trade, US dollar yen. This one, simple breakdown. Now, you might be looking at this and saying, well, this was in an uptrend, wasn't it? And the answer to that is no. I mean, it was over here, but not where I shorted it. It was not in an uptrend. Now, admittedly, it wasn't in a downtrend either at that point. This is something that I call a transition. And it's what I teach in the course, these transitions, but these transitions provide you with the earliest possible moments to catch the changing trend, the changing tide, so to speak. Okay, and so that's where I shorted this on the breakdown, and my target was right down here. Right? I'm not looking to be greedy in this. Right? Just looking to take a target right down into the bottom of this range, because you guys can see here 1, 2, 3 times in the past it held. So why should this time be any different? At least that was my thinking. And again, remember, I'm just trying to get the easy money, the meat of the move. So as we fast forward this here, you can see it came down right into that area. It came right down into that area, hit the target, and that's where I'm going to take the money, get out. Now, one of the things that you might decide to do is take the majority of the position off, right, and then hold a little piece for what could be a bigger type of move. And honestly, if that's something that I'm thinking about doing, I will communicate that to you as well. If I'm going to look to hold on to it for a bigger move, why am I not going to share that with you? Why would I try and keep that to myself? So that's obviously not what I'm about. So I'm really an open book when it comes to this stuff. So that's part of what will be in this new newsletter that we're going to be rolling out. All right. So guys, I'm going to hand the mic over to Amber for just a couple minutes. She's going to talk to you a little bit more about the newsletter and something special that we've got for those of you who are here on the webinar. But when I come back on, I'm going to share with you 4 things that you can do now to become better traders. All right, so I'm going to hand it on over to her. She's going to come on, and then, like I said, I'll be back on with you, and we got a couple more examples to look at. If you want to ask some questions at that point in time, happy to answer any and all questions as well. Okay, so here is Amber.
Thanks, Kurt. Quick sound check, just make sure everyone can hear me. Quickly, if you can put in a yes, just so I know We are good to go. Perfect. Thank you, Arthur. Thank you, Tom. Those of you that don't know, I am Amber Capra, the wife of Kurt Capra. So he is the educator. I am the counselor. So we kind of handle both ends of the client's needs. And Kurt's been teaching this Forex course through Pristine. If some of you know them, we were recently merged with T3. He'd been teaching this course for about 2 years now, and it had actually really been catching on as of late, and one of the main reasons, as he was talking about, was I think that the Forex market is one of the unsung heroes of trading, especially if you live within the United States. You think of trading, you automatically go to the stock market, and Forex just seems like the the neglected younger sibling that no one really gives the credit to. But I've been finding that more and more stock traders had been getting into Forex. Some of the reasons they mentioned were the costs. It can sometimes be significantly cheaper to trade Forex than stocks. You don't have platform fees or data fees. The spread is built into the price, so it's not another outward cost. Like you said, it's highly liquid, so you don't have to worry about fills or gaps or anything like that. So it's a good trading environment to be in, and especially if you're either newer to trading, if you have another commitment like a job. I saw some of you right here, you had to go, you had a job, or other commitments that can't keep to the stock market, or scanning through thousands of different stocks. Forex may be a good answer for you. Also, if you're a stock trader, you can easily add Forex into your arsenal of trading. It's good for after-hour trading, maybe 12 to 24-hour holds. So it would be really ideal for any trader, newer traders, experienced traders, current stock traders. If you don't have a lot of capital, this is an ideal environment for you. If you don't have a lot of scanning time, this is a great environment for you. Instead of thousands of stocks, you have maybe 15 main pairs to look through. And that doesn't mean that the opportunities aren't there and abundant. It just really works for any kind of individual. So again, I've been seeing a lot of stock traders kind of go into this format, and not only do we offer the education side that Kurt's going to be teaching, the lab, the newsletter that I'll go into in a moment, but also T3 Trading now can open Forex accounts. So that's been a great thing. They've opened accounts for several of my clients. They use the MT4 Platform, which is one of the more popular platforms in trading Forex, and it's a very small capital contribution that you need. I think it's like $2,500. You can open up an account, and with 50-to-1 leverage. So it's a good opportunity. Yeah, in the Zone Trader, you can preview the platform. You can get a demo. If you email into info@t3live.com, I'll send you to a link where you can get a demo and try it out. But it's one of the more popular platforms. It's called MT4, MetaTrader 4, and you can check that out. As far as the offer that we have for you today, again, as Kurt was saying, the newsletter is going to be a newer service that he's offering starting September 1st. In the past, like I said, he's been teaching this course for about 2 years or so. We had a Skype group. So it started off as a smaller program. Again, not a lot of interest in Forex. Kurt grew that program with Pristine. We had a Skype group for our members at that time. A lot of them had been requesting to have more of an alert service, so they didn't need to constantly watch the Skype, especially if you're trading on 1 hour, 15-minute time frame, 4-hour time frame. You don't necessarily want to be sitting in front of a trading room either. So we decided to go with this newsletter where you can get the alerts as they happen. It's not like a once-a-day type thing. As these alerts happen, as they're managed, as they're closed, new opportunities that show, things that he's looking at, it will be sent to you throughout the day. So you can get it as it happens wherever you're at. He will also be doing a weekly video on Fridays that will kind of recap the trades of the week, also give you a projection for the upcoming week and things that he sees setting up. And then he'll also, for his subscribers, he keeps giving, he'll have a weekly session on the first Wednesday of each month where all the group members can come together as one little family, talk about what they're in, ask questions, pick Kurt's brain. Maybe he can answer about different pairs that you're looking at and aren't sure of, management, whatever it is. It's a group environment where you can come together and really talk about what's been going on recently. So with this new letter, you will have 1 year. This is only offered tonight. We're giving you 1 year of the Forex newsletter. I hate to call it really a newsletter because a lot of people think it's a once-a-day type thing, but you'll get his Forex alert service and his weekly video and his monthly meetup. For $7.95 is the yearly subscription, and for tonight we will throw in his lab for free. So he will be teaching the upcoming Forex Lab on September, if I have it right, September 12th through the 17th. From 19th through the 23rd, from 9 a.m. to noon. He'll be teaching that course. You get a full course manual that has all the strategies, all the entry patterns, everything that he teaches is going to be in that manual. You get that the day you sign up. So today, if you sign up for 1 year, you will get the manual. You can look through and preview and get ready for the lab. Also, you'll get the lab recording that you can refer to at any time. Usually the lab alone is $9.95. So with this new rollout, subscribe for 1 year. You'll get the lab for free. It's an excellent offer, especially me coming from Pristine, where he's taught this for quite a while. It was, you know, double, at least double this price. It was about $2,500 we were selling it over there. So coming to T3, we realized, you know, when it would lower the price, make it more accessible for you, especially if you're trying a new market or if you don't have a lot of capital or a lot of time. We're giving you everything you need: the alert service, the course with it recorded if you can't attend live, the course manual, everything that you will need in this offer. If there's any questions, let me know real quick before I give it over to Kurt. But if you'd like this offer, again, normally if you buy the lab, it's $9.95. You get 6 months of the newsletter. Tonight, you can get 1 year for $7.95, and we will give you the lab for free. And like he said, a lot of what he teaches in this Forex course, you can translate into other markets. I've traded stocks. He trades, you know, Forex. Some of the patterns that we use and that we look at are very similar. So it not only will help you in trading the Forex markets and give you some of those nuances that you need to be comfortable with, like Fibonacci is a little bit more important, you know, what the pairs are, things like that. But you can also translate it to any, you know, anything that you're looking at. A chart is a chart. So it will really strengthen you in any area. I'm in. Oh, great, David. David, yes, I've been. David Lee in here. I gave him the MT4 platform last time, and he said he's been testing it out, looking into it more. So I'm glad to see that you'll be on board. I look forward to talking with you soon. Great. Get that funding ready. Yes, so yes, it will be the same one at forex.com. Honestly, if you just want to get that demo there, great, play with it a little bit. But if you were to open the account with T3 Trading, you can get an institutional retail account with them. So a little tighter spreads, a little bit better environment for you. So if you were to even use the demo, anything like that, but you want to open the account, either come to Sammy or I, or email info@t3live.com, or email your representative directly, and we can, you know, get you hooked up with some inside people we know. Yeah, I mean, there's also a couple other platforms, but yeah, email us. We'll help you out. Yeah, you can use Forex Trader Pro is another one that's really popular. Either one, but we have the account opportunities, we have the alert service for different ideas, we have the course for you to be able to, you know, find some ideas on your own and to get some of these basic technical strategies down. So we have it all. Again, Sammy and I will be here tonight. You can email in at info@t3live.com, get on the subscription, get in on the lab, and see if Forex is something that works for you. But again, it's almost the unsung hero of trading. So if you're a stock trader, if you're new to trading, you don't have the capital, don't have the time, or really just want to get your feet wet in another market, Forex is the way to go. Real quickly, I know Kurt wants to come back on, but I've actually been talking to quite a few different traders that had an interest in futures. in futures trading. For Sorry, I lost you there for a second. But I had a lot of people talking to me about futures for some of the same reasons they were wanting to get into futures, and some of those same reasons you can be using in Forex. And what I've been finding is futures, a lot of people like it with the liquidity, the time that you can trade and things like that, but it can be a little volatile at times where I start introducing them into Forex and they're starting to see that maybe that's a better option. So if you've been looking even into futures trading, Forex may even be a better environment for you there. So again, email us, info@t3live.com. Tonight only, you'll get the year. After tonight, it's going to be 6 months. So get in on it. David, I know you've been wanting to do it. Let's get it done tonight so I can get you that year. And again, if you have any questions, we'll be around. You can write them in the question box. We'll answer them there, or give us a call, email us, and we will help you there. All right, Kurt, you ready to come back on? All right, he's ready to come back. So thank you again for your time. If you would like to see this slide, or if you forget the offer by the end of the webinar, email us, give us a call, and we'll help you back out. All right, so thank you so much for your time. Really hope to see you. Again, Forex, it's really something to look into. We'll get you all your feet wet with all the terminology you need to know. What's a pip? What are our pairs? Even us as counselors, we have information that we can give you before the lab to get your feet wet on some of that terminology. So whatever you need, we've got it here for you, and I will turn it back over to Kurt. Thanks so much.
All right, guys, I'm back. Can you hear me? Let's do a quick sound check here. You guys got me? Awesome. All right, so yeah, like Amber said, really pretty incredible offer. I mean, you're going to get so much with the coaching, the monthly sessions, the course, etc. So hopefully you guys jump on that. But as I promised, when I got back on, we were going to talk about, or I was going to share with you, the 4 things you can do to get better now. And this is just in my opinion, but when I started to really study the charts, and I mean, really study the charts, not just looking at them and then kind of getting fixated and hypnotized into it and kind of losing sight of it, but really studying them. What kicks off the big moves and ingraining that into your subconscious, right? That's what really starts to help. I went so far as to even drawing, like when I wasn't looking at the charts, I would be drawing on just white paper the patterns that I want to see setting up. So you really need to start studying the charts if you're not doing that now, right? And getting yourself to the point where you just subconsciously can visualize the quality of the setup, what kind of follow through it gives, how much follow through you can get from it, how are you going to manage it, all of that stuff. You need to start doing some visualization on, and it comes from studying the charts. Also, realizing that doing nothing is still doing something, because your opportunity is going to come. You don't have to be placing trades non-stop. In fact, I could argue that some of the best traders out there place the least amount of trades. In other words, you would be shocked at how few trades some of the more successful traders place. So, you got to realize that doing nothing at times is still doing something, because you're following your plan. You're waiting for your moment, right? Don't get sucked into the hype of what someone else might be doing, because then you're trading someone else's trade and you're not going to know how to manage it. In fact, you'll mismanage it. The next thing is You need to focus on adapting to the current environment and then exploiting it. Right? You got to realize that environments change. It's a dynamic environment. Trading is constantly changing. The emotions are constantly changing with traders. And if you don't have a method that's allowing you to be objective, then what are you doing? You know, you're constantly going to be chasing your tail. You have to be objective. And join a community that's going to help you achieve your goals, keep you accountable, help you out. Right? And that's what that newsletter or alert service is in part designed to do, between the alerts, you know, the email access to me if you have questions, the monthly meetup session so that we can review what's going on. All of that stuff is about creating a community that will help one, right? Myself included. You know, because you can never become complacent and think that you know everything there is to know. Because it's at that time you're going to start to lose it all. You have to constantly be willing to learn, wanting to learn. So here's another trade, pound US dollar. Another breakdown. I mean, it was just, you know, at the time, a lot of these things were moving lower. Yeah, I do look at the other pairs. I look at a lot of cross pairs as well. Basically, I look at a combination of the dollar pairs, pound pair, euro, yen, the Canadian dollar as well. In fact, US dollar, Swiss franc is another one that I look at. But yeah, I mean, I definitely look at a number of them. In fact, I was long Canadian dollar yen just last week. So yes, I do look at others as well. But I do try to focus on the pound, or not the pound, but the US dollar pairs primarily. But that being said, you follow the opportunity and whatever looks the best, and that's what I look to do. So with this trade, it was another short, and it's not that I am unwilling to go long. Quite the contrary. You know, I have no problem going long or short. I'm just going to do what the charts are telling me to do, right? And then I'm going to manage it as it tells me to do. Basically, I try to do as little thinking as possible when it comes to trading, right? I've got my rules in place. I know what I want to see. I know how I want to see it. I know where I want to see it. And then I just let the trade go to work for me. I try to be involved as little as possible, because I think we can all agree that when mistakes are made, it's because we did something outside of the plan. We did something out of, fear or uncertainty. So if we can do things to remove that, it'll open the door to a lot more success. So here's that trade on pound US dollar. Obviously you can see it's making money. And look, this is on the hourly time frame. So this is 1, 2, 3, 4, 5, 6 bars or 6 hours into the trade. And it's a painless trade. And even if it did take its time, and you know what, honestly, that's 6 hours from when it started moving. I actually remember this. I entered it on this breakdown right here. So there was a good 4 hours or so where I had to just sit with this patiently. But even then, be confident in what you're doing. Let the trade play out. Because if you killed this trade because it wasn't following through as quickly as you would have wanted, how stupid would you feel now seeing what it's done? Just believe in your bias. Believe in what you see. And more often than not, it will play out. So again, you got to be patient with it. If I have to be in a trade for, a day and a half, 2 days, then that's what it is. I mean, that's what the trend is telling me to do. I'm not trying to fight that. So anyway, really nice follow through, and it was a painless move. I mean, think about all that you could be doing in this amount of time, where you basically take the trade, set your stop, set your target or targets, and then you walk away. I mean, that's a lot of the time what I look to do. Right? And here's the trade. I mean, I left a little bit of it open. So here's the initial breakdown. I sat through this consolidation and wiggling because the daily chart was set up in a way that said we could get a much bigger move. So this was basically, you know, a day and a half worth of consolidation on the daily chart where it really went nowhere and then continued lower. So again, really nice move in our favor. Like I said, this is what you want, an approach that's going to get you objective. And look, you know, we can all, as I said a moment ago, learn together. And that's part of what those monthly meetups are all about. We'll go back and we'll look at trades that we took that worked out and didn't work out, because a lot of times you can learn more from those that didn't work. You know, one of the things I like to say is your future winners are locked inside of your current losses. So I'll say that again. Your future winners are locked inside of your current losses. If you can correct those mistakes, you can start to unlock even more money. And that's part of what those monthly sessions are going to be about, is finding out, you know, what did you do well? What did you not do well? How can we correct it? And a lot of times it's a simple tweak. It's the same mistake that's happening again and again. You just don't realize it. You just need someone else to take, you know, a fresh look and help you out. So that is what the newsletter, the alert service, whatever you want to call it, is all about. The course is going to help get you, you know, jumpstart. It's going to help get you a jumpstart to seeing things the way you need to see things. So if anybody's got any questions, you know, now is the time. You know, I appreciate you guys taking the time here, as I said earlier, to be here. As I told you, it'd be about an hour. I'm 10 minutes over. So, you know, hopefully you guys can forgive me for that. But, you know, again, a year subscription to the alert service, you're going to get, we'll throw in the course with that, all for $7.95. Basically, you know, a year's worth of alerts, trade alerts, coaching, ongoing, you know, help for $7.95. You know, pretty incredible offer, if you ask me. And you know, part of it is because this is a new offering that we're having here with this newsletter. So that's why it's valued, or you know, for you guys, as low as it is. But if you guys have questions, again, happy to stick around. You know, I can bring up some of those charts again, right, if you want. But again, here's the offer. If you want to look at any specific pairs, I'd be happy to do that. But hopefully I see you guys in the upcoming course, September 19th through the 23rd. Love to have you there, even as a member of the newsletter, so that I could, you know, work with you guys on an ongoing basis. Love to do that as well. So thanks again for your time, guys. If you have any questions, I'd be more than happy to help. Yeah, if you need help placing the entry, stop loss, etc., I'd be happy to do that. Yes, it is online. Correct. The instruction, the course will be taught online, similar to how we're interacting right now. Right? You guys can ask questions, you'll see the screen, we can bring up some live examples, etc. You're welcome. And yeah, I mean, I'll help you guys out with setting up the charts. If you're going to use MT4, that's actually what I use, MT4. So you need help setting up the charts, placing the trades, etc., I'd be happy to do that. So here again, just some of these things I've got going on. As I told you, we've got a short on Aussie dollar, US dollar, short euro, US dollar. Right? So those are the only things I really got going right now. Um, just looking to see if there's any other questions. The daily instruction is from 9 a.m. to 12 p.m. Eastern Time. It really depends, David. I mean, certain trades, it really depends on what's being offered by the trade. Certain trades can make much more than others, while others, you just don't have the same expectations for. I like that. I like that. Um, but yeah, I mean, I don't like to kind of back myself into a corner and say to myself, well, this is what I need to get. I'm looking for a fixed dollar amount on a trade because sometimes that fixed dollar amount is too much, right? You're expecting too much out of the trade, and other times it's too conservative, right? You're cutting yourself short when you could be getting much more. So that's why, you let the trade tell you what it's willing to give you. Right? You let the trade give you whatever it wants. Right? So again, guys, if you're interested here, give us a call, email info@T3Live, whatever works best for you. Right? You can give us a call. Like I said, email $7.95. You get a lifetime worth of education, at least a year of the newsletter, which is going to have trades, the meetups, etc. It will pay for itself, no question. All right. So thanks again for being here, guys. I'm going to sign off. And awesome, David. I will look forward to having you there, along with everybody else. So again, have a great night. Enjoy the rest of your day, and we'll talk soon.